Good afternoon, good afternoon, everyone. Thank you for joining us this Wednesday afternoon. We'll just wait for a few more minutes. It's exactly 3:59. We just start with at around 4. That's another 1 minute to maximum 90 seconds from now. Let's have some more people joining. I see a lot of people joining at this moment. Let's wait for a while and then we just start off again. Thanks again for taking out this time. Good afternoon, everyone, again. We'll just wait for another 30 seconds. I see a lot of people still joining in. We have touched three digits. That's a great number, and we look great numbers again, more joining in. So let's wait for another 30 more seconds, and then we'll just start off with the exciting webinar today with a great topic. Perfect. Let's start. First of all, thank you, everyone, joining this afternoon with us, Wednesday afternoon. We generally choose this particular day today instead of Thursday because tomorrow being 1st May, it's a holiday, and we like to choose after banking hours, 4 p.m. today. So one more thing we just like to just put across, though this is a time which we just picked up as per the survey. Does it this time suit you? And what is the choice of your time? You can always put in the Q&A, that particular thing. I think really good feedback for us. In addition to this, you can keep putting in your questions in regard to the product. I'll be more than glad to answer at the end of the particular presentation. Well, we are over here this Friday, this Wednesday, of an exciting topic which we actually discussed last webinar, as we are going to touch base on fixed income products like fixed deposits, bonds, SM REITs, and what should you choose in 2025. Along with us, for us, we have a speaker with us, a expert speaker, I should say, Mr. Samir Bhandari, who is our co-founder and CFO. Well, just to give you a little bit background about him, uh, Mr. Samir Bhandari is a chartered accountant back in 1987. I am 1989. After completing his grad from IM from 89 to 96, he was part of Bank of America, Mumbai and Hong Kong. And from 96 to 99, he was with UBS Singapore as a managing director. From 99 September to 2008, he was a part of JP Morgan, again Singapore. Well, in June 2008, he was part of Lehman Brothers, where further the Lehman Brothers were picked up by Nomura Securities. And Mr. Samir Bhandari was a co-head of sales globally. His expertise lies purely into co-heading the fixed income and equity, and he was as well part of the global exec. Well, he's managed all asset classes. His background is very diverse, so it's great to as well get his viewpoint on the particular topic which we have in this point. Just to give you a little brief, introduction about myself. My name is Abhimanyu Arora. I've overall 25 years experience. I worked with banks like HDFC, HSBC, DBS in Singapore, and Kotak, and I'm a graduate from Mumbai University, and done my participation diploma from IIM Calcutta. Well, just to give a little bit background as well about our founder and CEO, Mr. Shiv Parekh is basically a Harvard graduate, Stanford alumni. He as well is comes with experience working with Citi and Stanford Management Company. He's Forbes 30 under 30, 2022, Business World Disrupt 30 under 30, 2022. Just to give a little one very exciting news, and this is basically for our people who were not part of the webinar earlier and might not be aware of this, but yes, it's a great news for us at hBits that we have received a SEBI approval for the SM REITs. And it's a new milestone which we were able to achieve at hBits. So congratulations to everyone over here, to the entire hBits investment community family. Well, just to talk about a little bit about us, we currently hold a of around 500 crores plus. We have in-house industry experts of around 75 people plus. Uh, and we have been, we've been very, happy to state that we've done an exit of a particular product, showing our performance track record at 17.54% IRR. Pipeline, we have around 20,000 crores of pipeline, which is available, and current registered users on our platform around 25,000. Just a little bit more, that's our team who come from Harvard Business School, Stanford, IM, and the team experience come from various, known companies which you can surely be aware of. Uh, well, as I mentioned earlier, in HBIS is the only real estate platform, or I should be fractional ownership platform now, SM REITs, who has successfully exited a property at an industry IRR of 17.54. Just to let you know, on that particular brochure, we had mentioned targeted IRR to be 15.54, and we delivered 17.54. Well, this is how we, since we are making this particular organization and we will be achieving milestones, we always choose to get the best partner for our products. So technology is through AWS, Zoho, Salesforce. Trusteeship is Access Trustee. We are talking about data and research. All the data points which you put across are through CRE matrix. Again, in legal, Trilegal, DSK Legal, Wadi and Gandhi, Shardul, these are among the top 5 law firms in the country, which are all associated and partnered with us. In leasing, JLL, Cushman Wakefield, Analog, CBRE, Savills Colliers. Banking is through ICICI, valuation is through JLL, and our taxation partner is ENY. Well, as well to just put across today, what we will cover today. We will talk about, as I mentioned, FDs, bonds, and SM REITs, and where to choose to invest in 2025. So investment landscape in 2025, a new era of choices. So what I'll do right now is I call in expert Mr. Sameer Bhandari to take over the presentation from here and guide us where we should invest in 2025 and how these asset classes work in the situations like these.
Uh, Thank you, Abhimanyu, so much, and welcome everyone to this exciting webinar. Now, it's always when you're investing your hard-earned money, you want to make sure that firstly the money gets the capital is returned. I think that's very, very important. That's one. Secondly, you get the best returns for your money. And I think these two are probably the most important things which people take into account. So what I'd like to do today is talk a bit about markets, global markets, talk about how do you have to compare SM REITs to fixed deposits, to bonds, and even to equities, and where do I think is the best platform to invest in. Obviously, global markets we've seen have been very, very volatile. Earlier on, till last year, interest rates were going up. This year, obviously, the Fed has cut last year by 100 basis points. The India RBI has been cutting interest rates. They've already cut twice. we expect them to cut rates further. Uh, but obviously, there is a lot of uncertainty in the markets because of the tariffs. As we've seen in the US, the tariffs have been imposed, and there's so much of uncertainty. Stock markets went through a roller coaster, stock markets went down quite a bit, and now they are slowly coming back. So it's very extremely important for an investor to make sure that his money is safe, his or her money is returning a good amount of interest, and over long periods of time actually gives you capital appreciation also. Today we are also seeing with rates coming down, and I do expect RBI to cut rates by another 50 basis points at least this year. We will see fixed income instruments like fixed deposits or bonds giving a much lower return. So why don't we start? Why don't we compare some of the other asset classes and see which is the best asset class? Next slide, please. Let's talk a bit about the bonds, right? Bond yields have risen in the past, and so has the volatility. With rates coming down, we do see yields on especially AAA bonds also continue to come down. But the key here is obviously the credit risk in these corporate bonds. I mean, we have seen bonds which are below single A, say double B or triple B, actually defaulting also. And one has to be very careful because a lot of the money which is going into these instruments are actually held by retirees or people who rely on this income to actually have a good life. So then it becomes very important to make sure that the credit risk of whatever you are actually investing in is AAA. Next slide, please. One of the things which we've also seen is the rise of alternative investments. When you talk about alternates, you effectively can talk about REITs, you can talk about fractional ownership models like us, and we are now getting regulated by SEBI and becoming more of an SM REIT platform. These alternates have basically two things in mind. Basically, two things which we keep in mind for our investors. One is we'd like to give them regular returns. If you compare it to risk-adjusted returns, these risk-adjusted returns are much better, and these typically will actually beat inflation. In a lot of cases, like fixed deposits and some of the AAA bonds, as interest rates continue to come down, it becomes very difficult to beat inflation. And we have seen inflation in most of the emerging market countries to be between 4.5% to 5%. So unless you can beat inflation, your capital effectively is getting eroded. Next slide, please. As we spoke about inflation, inflation continues to eat into fixed returns. As your returns come down, as inflation goes up, your returns continue to come down, and obviously it's eats into capital. You have to now shift focus. If you could go behind, AB. If you could now shift focus from nominal returns, rather than having just nominal returns or a rate of return, you need to have inflation adjusted return. And that's very important. And that's what we call real returns. And you'll see in the following slides how the real returns of SM REIT and some of these alternate assets are much higher than fixed deposits and bonds. So just in summary, I would say in 25, just being safe isn't enough. There is a lot of volatility in the markets. There's a lot of uncertainty in the markets. So it's important that investors need assets that can protect their purchasing power without taking unnecessary risk. This, I think, is probably the most important thing. Next slide, please. So we'll just talk a few instruments which can be compared to SM REITs. A lot of people allocate money to fixed deposits and to fixed income instruments. And the question for everyone is, are these fixed deposits actually outdated? Uh, let's look at the pros of fixed deposits, right? Obviously, typically you will have it with a AAA bank, so capital is protected. You'll have predictable returns, typically 6%, 6.5%, 7%. And for senior citizens, you will get 100 basis points more. And it's easy to manage. Obviously, the cons, if you see, taxation. So if you're in a high tax bracket, you would typically pay 35 to 40% taxes. Liquidity is low unless you break the deposit, where obviously it comes with a penalty. The absolute return, a real return, is much lower, right? If you're getting 6.5%, and inflation is at 5, your actual real return is only 1.5%. And there's no wealth creation really. There's no real appreciation of a fixed deposit, right? If you had a fixed deposit for a year, after a year, you'll actually get your money back. So who should invest in this kind of instruments? Retirees needing stable, low risk income, very conservative investors, people who don't want to absolutely take any risk should look at this fixed deposit. And for people who want to park emergency funds, they can either pass in liquid funds or some of these fixed deposits for a very short duration. So just to summarize, a fixed deposit will prioritize capital preservation, but offer very limited capital growth. So what are bonds? So bonds really are a middle ground with risks. Next slide. So here we talk about different types of bonds, right? You can have government bonds. Government bonds obviously give you returns like fixed deposits, much lower, but very safe. Then there are, of course, corporate bonds. Corporate bonds, the AAA bonds give you around 6.5 to 8%. The AA or below bonds could give you slightly higher. If you go, if you increase your risk appetite and go to double B or double B plus bonds, they might give you 11.5 to 12%. What are the pros of bonds? Obviously, it's a fixed income instrument. You get regular income via interest coupon payments, assuming that there is no default. Some bonds are tradable on exchanges, offering liquidity, but I would say the majority of the bonds do not offer liquidity. And then, of course, there are wide variety. There are tax-free bonds, there are secured bonds, there are unsecured bonds. If you look at some of the cons, obviously the credit risk of the bond becomes extremely important. The higher the credit risk, obviously the more the returns you will get. If it's a smaller company, the returns will be higher. If it's a larger company like Tata's, Reliance, obviously returns are much lower. Interest rate risk obviously is very apparent, because if rates were to go up, the prices of the bonds would then fall. Complexity, a lot of people don't understand the ratings, yields, duration. So obviously it's very important that you understand this before investing in bonds. And who should invest? I would say investors who have slightly higher risk appetite and looking for returns better than FDs, medium risk appetite, and 2 to 5 year horizon investors. The key insight here obviously is bonds offer a risk reward trade-off. It's definitely safer than equities. It's less volatile than equities, but requires selection skill to avoid credit risk. Now, let me talk a bit about small and medium REITs. As Abhimanyu mentioned, hBits recently on April 1 got our SM REIT license. So earlier on, we were a fractional real estate player, which was unregulated. Here we are now regulated by Securities Exchange Board of India, or SEBI. So it's a new asset class which we are creating, an asset class which gives much higher returns and is also quite safe. So how does the SM REITs work? Investors like you would buy units in an SM REIT. The SM REIT then would invest in pre-leased income yielding commercial properties. And these could be offices, it could be schools, it could be data centers, it could be warehouses. And for this, whatever units you bought, you will actually earn regular rental income, which will be paid quarterly to you, plus potential capital appreciation when properties are sold. Typical capital appreciation we expect to be anything between 5 to 7%. So the target IRRs, what we look at, between 14 to 17%. This is a combination of rental yields of 7 to 8% per annum, plus capital appreciation on property exit. Let's look at the pros. It's backed by a real asset, so it's commercial real estate. You can see and feel the asset, and without going into a huge ticket size, say 10 crores or 15 crores, you can actually use 10 lakhs to invest in this. It's regulated by SEBI, which is the watchdog for SM REIT. So you have investor protection and transparency. You are now diversifying into a hard asset because you can see and feel the asset. And obviously, it's a hedge against inflation uh, for two reasons. One is, of course, rental income escalates, typically either every year by 5% or every 3 years by 15%. And you actually get capital appreciation of 6 to 7%. And when I talk about capital appreciation of 6 to 7%, that's pretty much, I would say, mostly a done deal. Sometimes you might get less, sometimes you might get more, but definitely capital appreciation happens. So this is a synopsis of analysis of SM REIT with fixed deposits and bonds. And as you can see, the SM REIT risk return profile really stands out. I mean, where you're looking at yields of 7 to 9%, here you're looking at 14 to 17%. Liquidity, there are no penalties. These are going to be listed on the main board exchange. And as long as there's liquidity on the exchange, you'll be able to get exit anytime. It's regulated and risk is extremely low, like some of the other instruments.
One question, just while I was looking at the slides, Samir, we
Sure.
always used to talk about high risk, high return, low risk, low return. Do you think SM REITs have kind of changed the phenomena, saying low risk, moderately high return?
Absolutely. That's a great question, Abhimanyu. I do feel this instrument is a game changer. It's what it's if you see risk adjusted basis, it's low risk and medium to high return. I mean, getting a 14 to 17% IRR, not many instruments actually give you that.
Very
So on
true.
a risk adjusted basis, I do think this asset class is going to change a lot of things going forward. So key questions you need to ask before investing: what is my risk appetite? What is my investment horizon? Do I need monthly or quarterly cash flows? Am I okay with medium lock-in for better returns? In SM REITs, we do encourage people to be there at least for a minimum of 3 years. Of course, you can exit anytime because these are listed on the exchange, but we do feel that actually the capital appreciation which you get is really after 3 to 4 years. So we do encourage investors to actually have a slightly longer term horizon. So this is basically what we've tried to do is what kind of investors invest in what kind of instruments. So retirees, capital preservers typically invest in fixed deposits, bonds. People who want to take slightly more risk uh, invest there. SM REITs, I think it's not only growth focused investors, but actually retirees, capital preservers, some of the people who want to take more risk could actually invest in it. So if you see the fixed income asset class, I am very, very confident that SM REIT is actually going to be a game changer where a lot of the money is actually going to move from bonds and fixed deposits into this new asset class called SM REITs. So we'll just do a bit of Q&A so that there's clarity uh, on liquidity, tax implications, how do SM REITs protect the investors? and how to start investing in SM REITs. So we just do a bit of Q&A around this. Can you change the slide? Yeah. This we obviously spoke about. Why should I consider SM REITs over traditional FDs? The returns are much higher. The regular returns are anything between 7 and 9% plus capital appreciation. So you get 14 to 17% IRR compared to fixed deposits of 5 to 6%. Are SM REITs risky? Obviously, like any real estate investment, they carry low risk, but with structural leasing, pre-tenanted properties and SEBI oversight, the risks are professionally managed. I would say the main, if you could go back, AB, the main risk here is what I call the leasing risk, right? So assuming the tenant is there with you and the tenant decides to leave, then you have to find another tenant. To protect ourselves, what do? We typically have a security deposit of 6 months, which basically means that the tenant has to give us a 6 month notice period before leaving. And then we go into the market. We have a leasing team, which then tries to get a lessee as quickly as possible. So that's really, I would say, the only real risk as such. I don't see capital coming down, your capital values coming down, given the huge demand in commercial real estate. What is the liquidity in SM REIT compared to bonds? SM REITs are going to be listed on the exchange. We will also be publishing NAV once a year. In fact, we may do it even more. So this will allow you to exit at market value, subject to obviously liquidity on the exchange. The initial liquidity may not be as good as equities, but we do feel that over time it will become much, much better. Traditional bonds typically are privately placed, so the liquidity is much less there. Is there a minimum investment? Yes, in SM REITs with hBits, the minimum investment is 10 lakhs. Obviously, if you want to increase the size of the investment, that's not a problem at all, but the minimum is 10 lakhs. How are returns taxed? This is extremely interesting, so please follow this. Interest from FDs and bonds are taxed as income. So if you are in the 35-40% bracket, you will pay tax based on that. SM REIT returns, the way we've structured it, the rentals will be almost tax-free. So you will be getting returns, pre-tax returns, which are much, much higher, especially if you're in the high tax bracket. While the capital will be taxed as per capital gain tax. As you know, long-term capital gains is 12.5% after 1 year, and short-term is 20%. So as and when you sell, you'll be charged on capital gain. The way we've structured this and why it's tax-free is because the rentals which are paid are given as return of capital. So your capital keeps coming down. So say in a year's time, if you were getting a rental of 8 and you had invested 100, after a year, your capital will be 92. Whereas the rental, you will not pay any tax. So if you have to pay any capital gain after a year, if you sell it at say 100, your capital gain will be at 8 rupees, which will then be taxed at the long-term capital gain. So these are some of our numbers. If anytime you want to contact us, please feel free. But what we'll do now is we'll switch on to the Q&A. I can see a lot of questions there, and we'll try and answer each and every question so that you have clarity around this asset class.
Yeah, so the first question which we have, sorry, just 1 second, is can you please compare like to like slide says returns for FDs, bonds, but the IRR for REITs?
Sure. So when we talk about IRR for REIT, it's a combination of rental return and capital appreciation. So capital appreciation comes on exit of the property. So if you're just comparing the rental return, The rental return will be between 7 and 9% for a SM REIT. Fixed deposits, as you know, it's anything between 6 and 7%, and bonds, depending on the credit rating of the bond, it can be anything between 7% and even 13% if the bonds are much more riskier.
If someone wants to invest today, is it available? Well, as we speak, we are just probably left with actually as good as everything is closed. But you can surely reach out to your investment manager. If there's any slot available, we'll be more than glad to give you that particular portion. Taxation.
So taxation, Sanjay, as I mentioned to you, the rental income is going to be tax-free for SM REITs, and the capital gains will be taxed based on the capital gain tax. So long-term capital gain at 12.5% and short-term at 20%. The IRR for SM REIT is net or gross. This is when we talk about 15 to 17%, this is gross before fees. So if you take the fees, if you take net off the fees, then typically it comes down by 100 to 150 basis points.
Can you explain tax part more by Mr. Anup Matthew?
Sure. So as I mentioned, assuming Anup, you have invested 100 rupees in a SM REIT. So you bought units at 100 rupees. After a year, you would have received 8 rupees, say, as rental income. The 8 rupees will be tax-free, but your capital will now come down from 100 to 92. If in the second year again, the 92 will come down to 84 and the 8 will be tax-free. Assuming after 5 years, you have received 40 rupees as rental income, your capital value is now 60, and you sell the property, say, at 125. So the difference between 125 and 60 or 65 rupees will be taxed at the long-term capital gain tax rate of 12.5%. So your overall tax liability comes down, plus it also gets postponed. And if you don't sell your property, even after 7, 8 years, you may not be paying any tax at that point in time. Suryakant, I've just explained how the rental is tax-free since we are treating it as capital repayment. And we have a view from ENY, who've given us a written opinion.
So Mr. Sham Yadav happens to ask, we've got 8 questions. First one of it is, dividend returns is how many percent?
So this will be based on the rental. So it will typically be anything between, I would say, 7.5% and 8.5%, or 7.5% and 9%. How will you pay us? We will pay you quarterly, as per SM REIT regulations. If I want payment every month, will you give in this way? No, because as per SM REIT and as per SEBI, it's typically quarterly.
What are the documents that you will give us after we pay? So it's going to be a simple listing on the exchange, how it's going to be dematted. So you'll have units available on your demat, or your general, how do you trade, and that's how it will be available. What is the mode of payment? Of course, it's going to be through your bank account directly for the purchasing of the particular units online. Sameer, over here, I guess you can always talk about a little bit about how we will be approaching the IPO. So maybe that could be covering a little bit more about our structure going forward.
Sure. The way SM REITs is going to work, it's going to be basically an IPO. And the way it would work is we would first identify the property, sign a term sheet with the seller of the property. We would then appoint lawyers for due diligence and a merchant banker. The merchant banker will then start preparing the documents for the SM REIT IPO. After 45 to 60 days, once the due diligence is done, the draft documents will then be filed with SEBI. Once SEBI gives approval, the IPO then will be open for 4 to 5 days, and you will then subscribe to the IPO through either directly or through brokers. And like you normally apply, you'll have a demat account, You apply, you get allotted. Once you're allotted, the instrument goes into your demat account, and that's how it would actually work.
Great. So I believe that that will take care of the answer. What is the mode of payment? Apart from this small and medium REITs, is there any high value REITs?
Yes, there are REITs, embassy REITs, which are listed on the Mindspace Embassy, and one more REIT is actually listed on the exchange. The difference there is it's not any specific property; it's 8 or 10 properties put together. They also have properties which are actually under construction.
So just to give a little background about what SM REITs and REITs are. So SM REITs basically is from a 50 crore asset to 500 crores, and REITs is basically a asset takeover of around 500 crores to 5,000 crores. That is basically the overall structure of it. In SM REITs, it's basically a single asset, and in REITs, it's a group of assets. So that is the basic kind of a difference between SMEs and SM. Just for your information, can we get to know more where you have invested our money?
Yes, you will know exactly where the money is going. You will know which property it is going because it's going to be typically one property. So you will have all the details of that property. Tax on the returns, we've discussed this. How to invest in SM REIT? As I said, it's going to be an IPO. You will be subscribing to an IPO, and that's how the money will be invested. Is this going to be traded on the stock exchange? Absolutely. It's either going to be traded on the NSE or the BSE. What are the typical exit options of REITs? There are two different types of options. One is you can sell your units on the stock exchange anytime. There is no lock-in period. That's one. And the second exit option is when we decide to sell the property. That's when you can also exit your units.
Mr. Srihari happens
Couldn't
to
quite.
ask, yeah.
Sorry. Go ahead.
So Mr. Srihari happens to ask, couldn't quite get the rental return coming as return of capital. Please explain. Uh, Mr. Srihari, what we can do is you can, taking the pace of the time, we're at around 4:36, and I see there are another 10 odd questions available. We'll be more than glad to have a one-to-one conversation. Please reach out to us or any other investment manager. More than glad to answer that one-on-one. Mr. Suryakant Ranjan, process of buying, is it via DMAT? Yes, it is via DMAT. Mr. Kishore Hegde happens to ask, since rental income is treated as a capital redemption, the capital gain on exit will be inflated. Am I right? Yes, it will be inflated. But if we talk about it, is a much more tax efficient product. I did an example. I did mention in the last webinar that I took an example of 100 rupees, and with the example how Mr. Sunil just gave right now. On 100 rupees, same parameter, which is current assumption, how we do versus how it is going to be done as per the ENY, which we have taken the guidance on. It is turning out to be a bit of around 8 rupees more if I just take rupees investment of 100 rupees. So if let's say a crore rupees, we are earning around 8 lakhs more on a net income I'm talking about. So it's more tax efficient. Anonymous attendee, Property Share Investment Trust InvIT, Prufsha, which is SM REIT started a year ago at 10.5 lakh unit, is now trading at 10.02 lakhs. How this can be explained from context of capital? Is at no risk?
So
Well,
in this case, I think the issue price was 10 lakhs, and then it went up and traded at 10.5.
true.
I'm not saying that the market value cannot change. The market value can change. You know, the 10 lakhs can trade at 9.5 lakhs also. But when I meant context of capital is limited risk, is that you still have that commercial building, you're still getting your rentals on time. But of course, the market, as you know, can trade up or down. We see very limited chances of this trading a lot below par unless someone is desperate to sell the units.
Vikas Chand happens to ask, will TDS be deducted? In the new structure of SM REIT, it's just going to be 1% because there has to be shareholding. So that is only 1%. part of the TDS reduction in the new regime. Mr. Vikas happens to as well ask, is there a tenure for listed SM REITs?
So there
Well,
will be sorry, go ahead, Ivy.
so well, generally as we mentioned about 4 to 6 years timeline for any particular scheme, and currently as we talk about fractional ownership as well, which is concurrent. So it's moreover to reach out to the targeted IRR we look forward to. Moment we feel that we are able to achieve that, and that will be typically around maybe 4 to 7 years. Maybe sometimes we get a hospital which is moreover like a 10-year lease product, but you will when you invest, you will come to know from day one what you're investing in. So it will be predefined kind of a product from day one when you invest.
Just to add, for
Yes.
you, there is no tenure, Vikas. So
True.
whenever you want to exit, you can exit, if that's the question. So you do not have a tenure that you have to hold it for 5 years. We
True.
encourage people to hold it for 3 to 5 years, but if you want to exit the next day, that's also possible on the exchange.
How to invest in SM REITs by Ankit through DMAT, and we have explained that before. Mr. Vikas and Hapunad, what is the minimum sponsor commitment?
The minimum sponsor commitment is 5%. If we want to borrow against the property, then the minimum sponsor commitment is 15%. In our case, we don't expect to borrow in the property.
Right. So Mr. Agnish Jana happens to ask, with SM REITs investment with a specific corporate or its kind of hBits stock means a piece of hBits market value instead of a specific corporate real estate?
No, that's absolutely not the case. In this case, it's a SM REIT IPO. It's the IPO of the property. So say it's property X, you are doing the IPO of the property. It's not IPO of hBits market value. So it's two very, very different things. When we do an IPO, we will do an IPO of hBits, which will take into account how many properties are assets under management, what is our income, and a lot of other things. In this case, it's only going to be that property which is going to be listed on the exchange.
Well, there is a question which is asked that uh, can you talk about how hBits is trying to get sponsored to invest in SM REITs?
You mean, I presume you mean sponsor capital. So
Right.
we are looking at various avenues for sponsor capital. We are looking at debt also, and we have equity. And as you know, we recently raised 40 crores of equity also, which part of it will be invested in SMEs.
Yes. So Mr. Vikas Jain happened to ask, what will be the management fees? Is there a performance fees?
So the management fee is 1% per annum. Performance fees, we still not in fractional ownership earlier model, we used to have a 15% over a 10% hurdle rate. In this case, so far we haven't decided on the performance fees.
Well, I'll take another, quick 2 or 3, maybe 4 questions more. And to a surprise, Samir, I have a question for you as well.
Sure,
And
why
it's a
don't
little,
Amy, why don't we finish the questions here?
yes, of course,
Let's
after
try
that.
to answer all the questions. Yeah.
Sure. So can you share FAQ including questions asked now? Of course, we will do that. Uh, Next is Mr. Suryakant Ranjan. After the IPO, can we buy it like regular shares?
Yes, you can.
You can. Manish Saha happens to ask, how many days find credits after selling units?
So sorry, I didn't understand this
So I
question.
guess
What
he's talking about the transaction plus, redeemable points. So it's basically moment how it's been traded on the stock exchange. You happen to put across a redemption, and of course, I guess it should be any time between T to T plus 2 days maximum.
so right now, it's when you sell the units, typically it's I think T+1 now in
Yeah.
the stock exchange. So you'll get the credit immediately. Yeah.
And how many? And one question:
Days
which
credit.
property
Yeah.
now available to invest?
So we just as you know, we just got a license on April 1. So we are now scouting for properties, and we've identified a few properties, and we are making offers for those properties. So as and when the property comes, you'll be the first to know.
what percentage exposure of my portfolio should be dedicated to SMEs?
Um, so, so I would say typically people, if you see fixed income and equities, typically people will allocate either 60% to fixed income, 40% to equities, or vice versa, depending on their risk appetite. So the SM REIT returns are obviously much better than fixed income. And even if you compare it to large cap equity funds, SM REITs gives around 14 to 17%, large cap equity funds give another 12%. So my guess is you could easily allocate close to 20 to 25% to SM REITs. And even sometimes more because these are going to be traded on the exchange. It's not that you're going to be stuck with that. You can exit as and when you need the money.
Well, to a surprise, Samir, what has happened is that this last question is actually in the same lines to the question which I was going to ask you. So,
I see.
I was going to actually ask you, you being in the industry for around 35 years, worked on products like fixed income globally and everything. So, what do you think as, the current structure, how global markets are moving? Is it safe, sound, how one should move ahead? And I guess as this as well tick marks all the kind of objectives that are wealth creation, retirement planning, legacy planning. So, how do you see this approach coming on the way?
So markets, that's a great question, AB. Markets are obviously extremely volatile. So it's very, very important you understand what your risk appetite is. I mean, the US markets, if you see, have gone down, in fact, had gone up, and then from the peak, it's down 15%. So a lot of people are not able to bear the kind of volatility which is there in equity markets. Fixed income markets obviously are much, much less volatile. And within fixed income, obviously, we do feel, and I'm actually very positive that SM REIT volatility is a lot lower. So depending on your risk appetite, you can decide how much money to allocate. So for people who are retirees, for people who have who want regular income and who want a bit of capital appreciation, who want a product which is kind of low risk with medium to high returns, I would definitely say SM REIT is the way to go. I do feel this asset class is going to explode. It's going to become very, very large. I'm also quite hopeful that after some time, maybe 12 to 18 months down the road, the ticket size will also become smaller. I'm very, very bullish on this asset class. And it's an asset class where you can actually see the asset, feel the asset, you get regular returns, plus you get capital appreciation, which not many asset classes actually give. I hope that answers the question,
Yes, totally. Well, thank you
AB.
everyone for taking out
There's
time
one more
again.
question, but there's one more
Mhm.
question from Sanjay.
Okay, yes.
Key difference between SM REITs and fractional, why one should move to SM REIT than fraction. So fractional investments, Sanjay, were not regulated. So we used to do fractional investments and they were not regulated by anybody. So this is obviously regulated. That's one. The ticket size used to be 25 to 30 lakhs in fractional. Today, the ticket size is going to be 10 lakhs. That never fractional never used to be listed on the exchange. This is going to be listed on the exchange. And finally, I would say the tax benefit which you get on SM REITs is much better,
True.
as you can see.
How will I know
Uh,
when IPO will come? By
so
Ankit.
Ankit, we will be obviously marketing the IPO. We'll have merchant bankers who would be appointed, who will also be marketing the IPO. I'm sure we have your details. We'll get your details, Ankit, and definitely you will see WhatsApp, email communications coming to you when the IPO is there.
Well, in addition to this, just for updates, I'll request all of you to follow us at LinkedIn. That's the place where we continuously, market ourselves and put across any kind of information or news to put across. And please be in touch. And thank you again, everyone, to taking out this time this Wednesday uh, for the lovely, discussion with Sameer Bhandari. Thank you, Sameer, for giving us an insight on being a fixed income expert, and of course, though you have experience in equities as well. But this is the time when we really wanted your information and insight, where to invest, how to invest, and what to invest in 2025.
No, thank you,
Thank you, and
Abhimanyu. Thank you so much. And thank you, everyone, for joining this webinar. Thank you.
sure. Thank you very much. Bye bye. Thank you.